Let's connect with our special guest for today and try to understand that how is he looking at the market dynamics at this point in time and what is he penciling in. We are being joined by Shreyash Devalkar of Axis Mutual Funds. He's the head of equities. Hi Shreyash, a very good afternoon and thank you so much for your time. The market has been really volatile in the recent past, especially the mid and the small end of the markets. I'm sure you must be keeping some gunpowder ready. But wanted to know that is this a good time where you are actually now going ahead and deploying that gunpowder to buy into the mid and the small end of the market, or you still waiting out for good opportunities to enter?
Yeah. So as far as mid and small cap are concerned, the way the market has reacted and the way they have fallen in last month or so, there are pockets where definitely the value is emerging, and there are pockets still it is far away from one can call it as a bottom. So there are, yes, it's time, always such volatile time are always welcome for anyone to deploy cash and identify good companies in this scenario.
Which sectors are you being bullish on, Shreyash, at this point in time? Where do you feel that there are still opportunities left?
Opportunities actually are always in certain pockets. So if you look at multiple subsegments of mid and small cap, there are certain pockets where there are corrections for some. In some pockets, the correction are more because of the valuation, and in some pockets there are some news flows which has been there. So we are looking at pockets where whether the news flows are really justified, and to that extent, such pockets maybe will come. While there are pockets where the corrections are more driven by valuation. In case of valuation led correction, actually the rally has been so sharp that the valuation even today, even if after 10-15% correction, you cannot call it as a cheap valuation per se. So those pockets one need to ignore it even at this point in time.
All right, Shreyash, but from the next month onwards, we will be looking out for the earnings as well. So at this time, any sector that you are closely looking at, keeping earnings in view, any sector that you believe that could perform better, and also give your take on the IT space, because after the Accenture results and the stock impact, it has been a little bit of a dampener for the Indian IT space as well. So going ahead, what's your take on the IT space as well as from the earnings perspective, any sector that you feel that can do well in the Q4 of this earnings?
So the trend has been same actually, and probably the same trend may continue this earnings season as well. That exports-oriented companies have not done great. It started with IT, and it is also getting translated into the results of other export-oriented companies like capital goods and auto ancillaries as well. So that pack, which is more export dependent, is expected to remain weak for a while as such. When it comes to other pack like consumption, again, consumption as a theme, and especially in the mass category consumption, the companies has been reporting weaker results for multiple quarters. We think that that trend may continue as well. While the companies which were or which are, especially in the high-end consumption or discretionary consumption, they have reported good results. It can include autos as well, and that trend continues. While in case of industrials and investment-oriented companies, definitely there has been good order inflows which they have reported in last few quarters.
Okay, Shreyash, another chatter in the D Street is about the theme that could pan out in the next couple of weeks now is the forecast related to the weather, because this time, how are we going to brace ourselves related to the scorching heat is something that we can start in the times ahead. And I could see that Blue Star is one of the counters that you have in your portfolios you still like. So are you also closely tracking this theme, and this time are you expecting anything out of this theme, that because a couple of reports in the last week as well were highlighting that this time the heat could be really bad, in all these counters related to the AC manufacturers, from the batteries, these are something that one should start looking out for. So given the correction, do you believe that this is a good time to actually look out for these counters? And what's your take on the long-term trajectory for Blue Star as well? Kindly share that.
Some of these categories like ACs, etc. It's more the call is more on overall penetration level in market because these seasonalities, that one season being good, one season being bad, that continues always. And if you notice that some of these companies and some of these segments where the penetration is low, it has been there in our portfolio for quite long period of time. So instead of calling out for a season per se, which obviously a good season may benefit and should benefit these companies, but the ownership is more based on the long-term trends and the penetration level as such in multiple such counters in our portfolio. So instead of looking at only this manner, generally what we are looking at is what are the themes which will continue over longer period of time. So in that, what we believe is the segments which are more driven by easier liquidity and potential rate cut. So one need to be nearly clearly watchful of those sectors definitely from here on because if there is going to be rate cuts and it will be actually preceded by the ease of liquidity, then the segments like financial services, etc., and some segments which are also dependent on liquidity, those need to be looked into in more details. Apart from that, the sectors which are where the power sector demand is increasing, and those oriented sectors are also has been doing well for quite some time in last few quarters. So these are that's how we would look at it.
All right, Shreyash, and lastly, before we let you go on that, since you touched upon the power space, and a lot of these experts are believing that the power story in India has long legs to go, even from here on. But some people are also debating the fact that the kind of rally that we are seeing, it was only because of the valuation comfort that these power counters and especially these PSUs were giving in the past. So, what's your take on the power space? And if somebody has to play the theme power space, where is the correct opportunity as per you, which can do better in terms of the kind of segments that we have in the power, be it power generating companies, power financiers, the companies which are related to manufacturing of these power equipment. So how are you seeing this whole power theme playing in the country?
Sure. As you're rightly highlighting that yes, this theme it has been playing out for quite some time. So actually, it all started probably in 2022 as such, and it started globally as well. It's not only in India that incrementally power requirement will be higher, and that's where even in Europe, US, the renewable companies and everywhere in the world, the capex and the power increase. So definitely, this theme is there and it is going to be long run because this sector is not like the investment doesn't happen overnight. So you are going to go through your ups and downs in this sector, and that longer term theme will play out over a period of time. In this, obviously, there are three segments which you normally look at. Is one is the asset owner, the second is the construction companies, and obviously there are capital goods companies in this. In these asset owner, historically, what we have observed is one need to be very careful there on the valuations per se because give and take overall the ROEs of the asset owner is limited. Yeah, and that's where one need to be very careful on the valuations in that part where of the power chain. When it comes to capital goods companies, then definitely here again, most of the companies, the valuations has gone up, but definitely there will be pockets in this where the the growth may continue for longer period of time. And then there are ancillary suppliers to this power sector as well as the construction names, and those names are also one need to look into detail. So there are these three segments are there, and then historically, as you are aware, that any infrastructure building generally the historical trend has shown that during such a process, the capital goods and construction names has done better, has given better returns.
All right, Shreyash, thank you so much for sharing your take on the power companies and the rest of the market as well. It was a pleasure having you. Thanks so much for your time.
If you like this video, then like, share and subscribe to ET Now.